First Republic Bank has been seized. Essentially, the bank collapsed and they were sold to JP Morgan. How did this happen? We're going to talk about that in this video. What does it mean for the cryptocurrency market overall? We're going to talk about that as well. First, let me quickly go over this news story here and get you up to speed. So, regulators seized First Republic Bank and struck a deal to sell the bulk of its operations to JP Morgan, heading off a chaotic collapse that threatened to reignite the recent banking crisis. So, they're saying, hey, if we didn't do this, we're afraid that the bank would collapse. And once it collapsed, which essentially, I mean, I don't know how you define collapse and takeover. I mean, you're kind of parsing hairs there a little bit. But anyway, so at this point, they're saying if it would have collapsed, it could have reignited the banking crisis. So we had to step in and do something. As part of the agreement, the Federal Deposit Insurance Corporation, FDIC, you know, the company or the organization or the corporation, the insurance corporation that you and I think is going to bail us out as individual depositors if something happened to the bank. Yeah, those funds. They got used to be able to purchase First Republic's loans. The agency estimated that its insurance fund would take a hit of $13 billion, meaning that would be $13 billion that they could not use in the future to make depositors whole. Think about that. JP Morgan also said it will receive $50 billion in financing from the FDIC. Oh, now what they're doing is they're using FDIC to bail out the big banks. They're making a bank even bigger and more powerful. I mean, listen, I understand the argument that this is actually better and is less expensive than making all the depositors whole of First First Republic. I understand that. I get that. But what happens when there's no more money in FDIC? What happens then when the bank collapses? That's my challenge. If they could use FDIC funds to make depositors whole and let the bank collapse, if they could do that, now those depositors would take that money and they would go and put that into a bank that they wanted, the bank that they like, a bank of their choosing. This would require banks to compete for customers. Now instead, this is the government picking winners and losers, the big winner here being JP Morgan. 3 of the 4 largest ever US bank failures have occurred in the past 2 months. If that's not a sign of changing fundamentals, I don't know what is. 3 of the 4 largest ever US bank failures have occurred in the past 2 months, ladies and gentlemen. This deal means JP Morgan, the largest bank in the U.S., is poised to emerge from the current crisis even bigger. Let me ask you a question. This is the CEO, Jamie Dimon. Do you think he makes more money or less money if JP Morgan is a bigger company? Do you think the size of his political donations go up or down if he makes more money? Do you think the political donors, the politicians who are writing cryptocurrency regulations, do you think he donates to the ones that are given friendly cryptocurrency regulations, or do you think he's donating to the ones that are protecting his bank and help keeping his bank in power? Here's another one. Do you think he's writing political donations or he's giving political donations to the politicians that are looking to make a better, fair environment for small banks and credit unions to compete? Or do you think he donates to politicians that promise to look out for his interest? Just a few questions to think about when you hear people say, "Oh, we need crypto regulations. We need crypto regulations." Yeah, you're asking for the nails to be put on in your own coffin when you have guys like this responsible for donating to politicians. All right, let's keep going. First Republic's failure seems unlikely to spur another crisis of confidence in mainstream lenders that served a large chunk of American businesses and consumers. Let's read that again. First Republic's failure seems unlikely to spur another crisis of confidence. Okay. So why did they do it again? Because they were heading off a chaotic collapse that threatened to reignite the recent banking crisis. Is it me, or is that a conflicting statement or contradictory statement? All right, let's keep going. This is the last stages of that initial panic. First Republic's problem started as a result of SVB and Signature. So let's look at what happened. Small bank, SVB collapses. Bigger bank, Signature collapses. Bigger bank, First Republic collapses. This is why they're saying they did not want to reignite a recent banking crisis. They didn't want to reignite that chain reaction. But this Stephen Kelly guy says, hey, this is the last stages of the initial panic. First Republic's problem started as a result of SVB and Signature. And he went on to say, this isn't a story of 2008 where one bank went down and investors focused on the next biggest bank which would wobble. What? What? Small bank, big bank, bigger bank. Contradiction. It's crazy sometimes when I read this stuff and I'm like, what? Who is writing this? All right. So the immediate cause of First Republic's collapse was a smartphone-enabled exodus of panicked depositors with big uninsured balances. But the bank's problems were rooted in a wrong way bet on the interest rate. So here's the question. Why did First Republic fail? If you read this, it's like, oh, they made a wrong way bet. They made a mistake. They took unnatural risk. They bet. I mean, using the word bet means they made a gamble. So what were they gambling on? Were they gambling on some sort of high risk cryptocurrency investment? Is that what was happening? Because that's what we were told about these other banks. We were told these other banks were taking unnatural crypto risk. That's what we were told. However, let's look at what their wrong bet was. Ultra low interest rates and pandemic savings boom supercharged the bank's growth. When the Fed began raising rates last year to cool inflation, customers began demanding higher yields to keep their money in First Republic. Rising rates also dented the value of loans the bank made when the rates were near zero. So let me explain what this means. If they issued a $100,000 loan at a 5% interest rate, that loan, if they were to sell that to another bank, they could sell that loan probably for more than $100,000 because now it's $100,000 plus 5% that it's going to be earning. But let's just say because interest rates go up, if they were to issue new loans at $100,000, those loans would have a 7% interest rate, hypothetically. I'm just using simple numbers here. That means if they wanted to sell that $100,000 loan with a 7% interest rate right away for $100,000, they probably could sell it for that with a small premium because it's not just $100,000, they're also going to be getting a little interest rate on there, 7%. But what is the value of the first loan that was issued for $100,000? Can they sell that for $100,000 plus a premium? No, they can't. It's instantly devalued. Why? Because all new loans are going to be at the 7% interest rate, not the 5% interest rate. So anytime they raise interest rates, it means all previous loans and all previously purchased treasury yields are worth less if they're forced to sell them. You know how they say you don't lose money on a stock if it's down unless you sell it? Same thing. They're not going to lose money. The payments are going to get made to them, theoretically. But if depositors want their money back, now they have to sell those assets to give the depositors their money back. And that, ladies and gentlemen, is the problem. I read an article that said there's over 160 other banks in the U.S. holding paper losses right now that could be susceptible to something like this. And here they are saying, oh, don't worry, there's nothing to worry about here. Anytime they say there's nothing to worry about, just know there's something to worry about, ladies and gentlemen. But this is good long term for cryptocurrency. Let me explain why. Every time we get news that there's a banking collapse, it's bad. We see the crypto prices dip, we see the stock market dips, all that happens. But invariably, the U.S. government has to step in. And when the U.S. government steps in, they always have to step in and print more money because the U.S. government they can't create money, they print more money. Inflation is rising right now. And in order to get inflation in check, the government is trying to raise interest rates. But whenever they raise interest rates, by the way, this is usdebtclock.org. This is our U.S. national debt right now. This is the interest on our debt. Just the interest is $560 billion, $562 billion. Just the interest. So here's the challenge. Anytime they raise interest rates, they also are raising interest rates on their own debt. We are already in trouble and at risk of not being able to. Oh, that's for another video, by the way. You got to make sure you subscribe. You want to see this video. But our debt is going up, higher than our country can produce money. So they have to keep printing to pay the bills. And whenever inflation, one thing that we're learning very, very quickly is that the price of Bitcoin goes up faster than inflation because it creates a liquidity crunch. Anyone on my channel knows that when I invest in micro cryptos, I like to look for ones that are potentially going to have some sort of liquidity crunch that's going to force the price to go up. Well, now you're talking about inflation creating a massive liquidity crunch. And there's more to it, by the way. I believe that we are in the next 2 years, we're on track to have probably next 18 months. This is not financial advice, but you can mark my words. You can save this video. Let's see how well this ages. I think the next 18 months, we're going to be inside of the middle of one of the biggest bull runs we've ever seen in all the history of Bitcoin so far. I absolutely believe that's going to happen. There's a possibility it doesn't happen. I'm going to make a whole video about this. There's several things shaping up right now that you need to know about. If you want to know how Bitcoin can potentially melt faces off, make sure you subscribe to the channel. Now, in the meantime, I will tell you this. Bitcoin's incredibly volatile. It's going up and down 5 and 10% per day right now. Part of it's because of what's going on with this banking situation. Part of it is what's going on with interest rates. Are they going to raise interest rates, lower interest rates? It's very volatile right now. So I primarily love to earn passive income in cryptocurrency. I believe that's far better than just buying Bitcoin, waiting for it to go up or down. I like the idea of earning passive income every single month. One of my favorite ways to earn passive income, I literally earned over $500 last month. And basically what it's looking like, just so you know, I'm about to do an update video on that for my subscribers, my email subscribers. But that video, it looks like every $1,500 I invest, I'm earning about $100 in passive cryptocurrency. So if you want to know more about that, subscribe. Look on the end screen. You'll should see a video where I talk about making $554 in a single month. Make certain you subscribe to that video. Watch that video. Ladies and gentlemen, stay tuned for another video coming up this week where I'm going to talk about the price of Bitcoin exploding and why I think we've got an enormous bear market on the horizon. I've been researching this lately, haven't been talking about it. I'm also going to be talking about some micro cap investments that I think could explode. You're not going to want to miss that, ladies and gentlemen. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.